Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Looking at the equity markets again this morning, typical Monday morning, they're a little bit slopping all over the place, but generally speaking, there are a few negative divergences. However, the equity markets are still in an uptrend. And the reason I say that is because we continue to see growth sectors, growth industry groups continue to act well, and specifically the NASDAQ index is leading the markets. Now, as far as the negative divergence, we do see lagging in the Dow Industrials, utility stocks, the staple sector, and the energy sector. However, on the other hand, the growth sectors, which are the more aggressive, which are technology, healthcare, consumer discretionary, continue to act very well. And actually supporting this whole thing is the financial sector. The financial sector's been pretty much flat to lagging lately, but of course with the jump in the 10-year yield, financial sector, if you look at the XLF, has right about at new highs. And if you look at the banking ETFs like the KBE, the big banking ETF, that came in at a new high on Friday, and it's up today. If you look at the regional banking ETF, the KRE, that's also hitting a new high. So that's very supportive for the market. So although we have these negative divergences, you still want to keep your eye on those sectors and stocks in those sectors. Now, if we look at the industry groups, we still continue to see good action in the biotechs, the drug stocks, the managed care space. The semiconductors took a little bit of a hit last week, but still didn't flash a sell signal. Now, one of the other very strong industry groups in the technology sector is the computer software security, the cybersecurity stocks. Those are acting very well. Stocks like Palo Alto Networks is leading that. So speaking of cybersecurity stocks, we have, and financials, we have two plays for you today. One stock it's worth taking a look at is Vasco. The symbol is VDSI, and they're a security company, software security company for banks. And they've basically been consolidating for a while now, since about November. Tried to break out in February, went back down to the $20 level. However, last Friday went past a 28 pivot on some good volume, and the stock continues to move higher. So you can take a look at that stock, and I wouldn't chase it past about 29.30, and maybe use the 26 area as a stop. Now, the reason we like it is the last 3 quarters, EPS has averaged 178%. The last 3 quarter sales have averaged about 48%. Has a return on equity of 20%, and funds continue to accumulate this stock. So again, check with your financial advisor to see if this stock is for you. The symbol is VDSI. We started accumulating on Friday, and we're looking to pick up a little bit more of it at favorable prices. Now, in the banking sector, one of our higher ranking stocks comes in is BOFI Holdings. That symbol is BOFI, and basically also moved past the 97.80 pivot area. It's trading in the low 98s today, and that's also, you can pick that stock up. Last 3 quarters, earnings have averaged at about 39%, and the sales have also averaged for the last 3 quarters at about 40%, has a return on equity of 18%, and over the last few quarters, mutual funds have been acquiring the stock. So it's been consolidating for well over a year. Over the last 4 weeks, we saw some really tight action on the chart, tight weekly closes, and when it has a move out of this area, that may be an area to pick it up. Now, you might want to use that 93 level as possibly a stop area, and of course, again, consult your financial advisor to see if this stock is for you. And as always, good luck trading. Don't take my word for it. Let price and volume be your guide. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.